We wanted to let you know that we're about to hear from the president, who is pushing for more free trade during his final year in office. Will his efforts fall on deaf ears in Congress? We will check in as soon as we get the tape from that, and we will find out exactly what he and some lawmakers are concerned about as far as their re-election prospects as the long-term direction of the economy moves all over the place.
Yeah, we've seen Democrats, of course, switch side on this issue. Our Fox panel is here now to talk about. We have Charles Payne from WStreet.com, Peter Schiff, author of Crash Proof, Victoria Barrett from Forbes, and Gary Keltbaum from GaryK.com. Charles, first to you. The irony of the debate on the North American Free Trade Agreement with Hillary Clinton among the Democratic Party is that Bill Clinton was one of its biggest supporters. Without Bill Clinton, we probably wouldn't have NAFTA right now. He wasn't the originator of it, but he pushed hard, went against the unions, went against a lot of members of his own party for this thing, and now Hillary is looking to back away from it.
It's amazing, you know, but then again, she's backpedaling on a lot of things right now. It's, you know, you got to really be very, very nervous between the rhetoric that's coming from her and obviously the front runner Barack Obama, because when you start to talk about punishing corporations that do business abroad or get tax favors or to keep certain jobs here, you know, obviously that smacks of protectionism. It's an awful time to be talking about protection, and particularly when these foreign countries are dumping billions of dollars on our financial institutions to keep them solvent. Could you imagine the lines at Citibank if they probably didn't get the money that they've received in the last couple of months? So people out there have to be very careful because, you know, we've always talked about the global economy. It is more so now than ever before, and I don't think we can put that genie back in the bottle.
Peter Schiff, is there any case where protectionism in even any type of sector would work? I mean, obviously the free market seems to work best, but from your perspective, what do you think?
No, we always want to have free trade, but the real problem for the American economy and the world is that we haven't been trading. You know, normally with trade, you export and then you import. You're trading products, but unfortunately, we've been exporting IOUs to pay for our products. That's why we have this $60 billion a month trade deficit. So the world has been subsidizing our excess consumption, and we're starting to feel the repercussions from that now because there's been so much inflation. Remember, these foreign central banks are flooded with dollars that exporters around the world earn, and they have to print them up. I mean, that's where these sovereign wealth funds are coming from and these foreign reserves, and inflation is running out of control.
Yeah, but Victoria, wouldn't inflation be even higher than it is if it wasn't for all those cheap imports?
Well, yeah, in the U.S., probably Peter has a point, though, in that by trading with countries, in a sense, we export inflation because dollars are sloshing around globally. But that's not a reason to clamp down on trade. That's not a reason to trade less. We should be trading more. And now, certainly on the government level, we shouldn't be raising barriers. But that's the rhetoric coming out of, you know, it's election year. What else do you expect? Hillary and Barack are in Ohio and Texas, and that's got to be the message. McCain, on the other hand, has made a really good point on trade, and he said, look, 95% of the world's consumers are outside of the U.S. Long term, that's the trend that matters.
Okay, so Gary Keltbaum, what's your perspective on this?
Look, I think the big problem is I believe George Bush doesn't have the bully pulpit anymore, and really nobody's listening. You have Barack Obama and Hillary Clinton daily out there saying NAFTA stinks, trade is no good, and we got to start looking at this in a different way going forward and protect this country versus everything else out there. And I have to tell you, not good. Go look at the last 20 years as trade opened up, barriers came down, economies around the world has gone bonkers to the upside.
But I can say
and I'm
this,
hoping
Gary,
we don't turn back the
Gary,
clock.
You know, Carlos Gutierrez, about a year ago, came out, and you saw the market tank on the news when he said that they were going to put up some barriers to certain coated paper coming out of China because they felt that the Chinese were flooding it with cheaper imports, and so they shut that down. That really slammed the market. This seems to cover both sides of the aisle, Gary.
Well, listen, true, but I mean, still, George Bush is mostly free trade. There has been point in time where they mentioned steel and things like that, but that speaks for itself, what you just said, Liz. Every time we hear about tariffs and protectionism, markets do not like it. You are correct.
Of course, Charles, the good thing about candidates running for president is candidates can't change trade policy. Bill Clinton, before he became president, had an anti-trade policy on a whole lot of issues that changed dramatically when he became president. Remember Al Gore? Al Gore was the champion of free trade when he was in office. Now that he's out, he's sort of lukewarm on it.
Well, obviously, I mean, especially from my perspective, and I think from Wall Street's perspective, we hope that what happens in reality, if the Democrats get the White House, doesn't live up anywhere near the hype and the rhetoric right now. That because hopefully the brighter heads, level heads will prevail, and they'll see like, listen, this is going to absolutely destroy the economy. Maybe it won't be a topic until re-election time, but hopefully it won't. They won't have the same impact.
The real problem is not going to come from Washington. It's going to come from Beijing. It's going to come from Riyadh. When these governments stop buying up all these dollars and stop propping up our currency, then we're not going to be able to trade because we're not going to have anything to trade for.
Okay, you know what? We've got
but Peter, China wants to trade with us.
Peter's got a great point.
Worrisome figures on the inflation front today.
The January producer price index shot up 1 full percentage point from December.
Analysts had been expecting a jump of just 0.4%, but the Fed says no inflation.
Yeah, right.
Well, they say inflation not as important as other things, but the annual rate of wholesale inflation has now reached its highest level, people, since 1981.
Will any of this force the Fed to change its course and stop cutting interest rates? And what would a rate hike do to an already fragile economy? Our Fox panel is back now to talk about it. Peter Schiff, this is your baby. If the Fed does not continue to cut rates, the market is going to react terribly. But you say it's vital that it hold up the rates. In fact, you think that rates should be increased.
They should be raising rates. The reason the Fed is being dishonest about inflation is because they're the ones that are creating it. The rising prices that we're seeing, like oil at $101 a barrel, that is the direct result of the inflation that the Fed has been creating and is continuing to inflate. They need to stop doing this. They need to raise rates substantially. The fact that we're going to be in a recession because we're so over-leveraged is just the price we're going to have to pay for being in this position in the first place. But the Fed can't continue to create inflation. And these numbers, even though we're seeing these big moves up in the PPI and the CPI, they still underestimate the problem. It's even more severe than these numbers let on.
Eric Bolling, you know that your bailiwick, the NYMEX, is responsible for a lot of the inflation as we see high energy prices, producer price index way outperforming what the expectations were today. What do you make of this? Do you think the Fed needs to start straddling the line here with inflation and start doing something to bring it down?
Yeah, you know what they should do? They should continue to cut rates because the more pressing problem is a slowing economy. As the economy slows, that rate of growth contracts. And that, by the way, Peter, that will bring your prices of oil and gold down. Sure it will.
Wow.
Contraction. You can actually risk deflation. By the way, housing is in a recession. It's not inflating, it's deflating. So that's drawing about 1% off of GDP. So my point is, right now, the more pressing issue, and Bernanke has said this, and Paulson has said this, the more pressing issue is making sure that this economy continues to grow, albeit slow, continues to grow. We'll deal with inflation later. We will. We'll raise rates.
The recession is not going to stop inflation. It's going to make it worse. Sure, maybe.
I totally disagree with you, Peter. I completely disagree with you.
But you're 100% wrong. What's going to happen is
you get down on the NYMEX and try to trade the way he does with oil. Go ahead.
Sure. There's going to be diminished demand in the United States for goods, but demand is going to explode all over the world because we're diminishing the value of the dollar. And as the dollar loses value, products get cheaper for the rest of the world.
And that's why we won't recess.
Go ahead, Gary Kalpom.
Look, here's the bigger problem. The Fed last week said inflation was anchored. In the last month, you have most commodities up 15%. This reminds me of the last year where they said subprime was contained and don't worry. Let me tell you what happens here. Number one, I said they were going to keep lowering rates. I expect them to go down to 2%. But what happens when the long yield of the bond market starts spiking to the upside, which we started to see? Doesn't matter what they do with short rates, because if the 10-year keeps going up, mortgage rates keep going up, cost of capital goes up, and anything they do is not going to help the economy anyhow. So they've put themselves in a box. I don't know how they're going to get themselves out of it.
Charles?
Well, looks like I'm going to have to tilt this back over toward the other side because I'm inclined to agree with my buddy down there trading the oil. I mean, listen, I understand inflation fears. In fact, I believe by the end of next year, Fed fund rates will be back over 4. But for right now, I think the Fed has made it clear that they have two choices. They can deal with inflation, or they can deal with the overall economy. They want to deal with the economy. Listen,
what they do is put it simply. They say, look, if a guy is dying because of loss of blood and he happens to have a pimple, you don't worry about his pimple.
Right. And although this is more than a pimple, but listen, today Vice Chairman of the Fed, Donald Cohen, spoke. He made it pretty pointed. He said, listen, this is elevated inflation. He doesn't think it will sustain itself in the second half of the year. He also mentioned that they will use every tool in their toolbox. I thought his comments, in addition to the IBM news, helped send this market higher. Listen, the market is speaking. It saw the PPI numbers this morning, and I think investors are sort of willing to give the Fed the benefit of the doubt.
Look at silver today, up over 60 cents an ounce. That's a very inflation-sensitive metal.
Demand is also driving up oil.
No, the inflation is
driving up oil more than the price of the dollar.
But inflation is feeding the demand. We're printing money, and people are spending it.
Now, hold on a second. Here's silver. Hold on a second, Gary. Tell us why this is so significant, this jump in silver price.
Well, first of all, it's a breakout if you look at the chart. But silver is very inflation sensitive. It responds, I think, more to inflation fears even than gold. And look what's going on. And, you know, when Liz mentioned earlier that oil is causing the inflation. It's not. It's the result of inflation. Prices going up don't cause inflation. Money supply growing does.
Victoria, take it from here. What is your thought?
Well, Peter, raising interest rates right now would just wreak havoc on the economy. There's no doubt that we have inflation. There's no doubt that we have low growth right now. We're in a bad spot. But raising rates would certainly make that worse.
No,
it
won't.
Just cripple the credit markets.
It's going to get worse if we keep doing what we're doing. Hyperinflation
it's like,
is
you
worse.
broke your leg, so now you're going to shoot yourself to make it go away. That makes no
this
sense.
is not a cure. Debasing the money is not a cure.
Go ahead, Eric.
I think the worst of all scenarios is the Fed raises, growth slows to possibly recession or worse, and then inflation automatically comes down. Now you have a situation where, okay, inflation is fine, but we're now in a serious recession, if not a depression.
Hey, gang, before we go to break, we just want to alert our viewers. So much. Well, they're called sovereign wealth funds. They're made up of money from foreign governments. Lately, these funds have been riding to the rescue of certain American financial firms who have been caught up in the credit crunch.
And they're doing that by infusing a lot of money into some of the biggest bank names like Bear Stearns and Citigroup. Well, now the U.S. government is actually pushing for regulations to keep these funds from having too much say over the companies in which they invest. Do we have anything to fear from these sovereign funds? Our Fox panel back now to talk about it. And Gary Kaltbaum, are we worried?
I'm not. Look, I think they're making a bet on us, and it'll turn up being right or wrong going forward. But I don't care whether they're coming from India, Pluto, or whatever. If somebody want to invest in our companies, I don't care at what price, let them do it. We invest overseas. Might as well do it both ways.
And listen, since we're talking about foreign funds, we might as well bring a foreigner into our mix. Axel Merck joins us now from Merck Investments. Good to see you in person, Axel.
Good to
We've seen each other over the television. Is there a concern, though, if, in fact, because these are not a bunch of foreign investors. These are government funds. That's why they call them sovereign foreign funds. They are actually related to the governments, which very often have their own political interests in what happens in the states. So shouldn't there be some kind of regulation on them?
Well, they have been flying under the radar for many decades. They have only now come to the news because of their very aggressive investments into the banks. We often forget the flip side of things. They're also very politically sensitive issues on their side. They don't want to be in the news. And so when at a point where we need their money, we can argue whether we should have it, but we made wrong decisions. We need their money. And I think it is healthy to have some sort of framework rather than just having politicians shoot across the bow from time to time. So it's also in the interest of those funds to put some rules in place, and they may have different ideas about those, but it's good to get to the table, negotiate these rules, and come up with something that makes sense. So we don't just have investments be blocked off because a politician says, oh my God, we can't have it, and block it from one day to the other.
Peter Schiff, do you see any danger in foreign nations, Middle Eastern sovereign funds have come in, infused capital into the banks? Although I think with some of the cases like Citigroup, they don't have power over the board. But do you see any problems with this type of behavior?
Well, the big problem is why do these funds exist in the first place? They exist as a result of our trade deficit and because of foreign central banks' desires to keep our currency from collapsing. So they create these funds, but the cost is borne by their own citizens who are suffering with the inflationary effects of all the money they printed to buy up all these dollars.
But do you have the worry of the investment here in U.S. firms? That's
sure.
what I'm asking.
Well, they're going to own. They're going to own the majority of the Dow, of the S&P 500. They're going to buy our assets out from under us. This is what we did. We traded consumption for our companies, for our assets.
By the way, I didn't get that memo that you apparently got from these sovereign funds. But should there be some concern about a government involving itself in our financial institutions?
A very small amount. I mean, because to a certain degree it's hypocritical. If you look at the problem we're having right now with investment banks, for us to talk about transparency, it's almost laughable. We still don't know what the heck is going on with all the major major investment banks here in America.
It's true.
By the same token, we're talking free trade. You know, if we want China to take out dollars, then we have to allow them to invest our dollars. Right now, sovereign wealth funds are about $3 trillion, and I think in about a few years they should be up to about $10 trillion. Even then, they couldn't buy up all of our assets.
Gary. 10 seconds, Gary.
And they don't just invest here, they invest around the world. So I don't know where Peter's coming from, how bad it is to be investing in America.
Well, they're getting lousy returns on their investments in the United States. Our markets have performed miserably.
So why are they doing it if they get lousy returns?
They're doing it because they feel they have to preserve our market. They're trying to prop up our currency.
They're making an investment.
They're making
long-term investment.
Believe me, they wish they didn't have these.
All right, bond insurers. It was a
problem.
All right, well, let's go back to the markets. The markets are trading up now in the triple digits, back in the triple digits. There's a lot of news to be watched. And by the way, this rally, as was noted, Scott Blyer sent me an email. As you know, Scott Blyer, one of our Bulls and Bears, saying it's a very broad rally. It's not just limited to a few stocks, although, interestingly, a couple of few stocks are not doing well at all. Google is down about 5% today, not stopping the NASDAQ. As we look there at the Dow Jones Industrial Average, NASDAQ is up percentage-wise just about the same percent.
I disagree with Scott, and we can bring in our panel right now. We've got heavy industry like Boeing, General Electric. We have United Technologies, all moving lower at the moment on the Dow. So they're not helping the Dow at all. We have the big IBM story. Peter Schiff, what do you think is at work here on a day like today?
Well, I think it's, again, the weakness of the dollar. I mean, look at what's happening. If you price the Dow in Canadian dollars, in euros, it's actually losing value today.
Okay, but why does that make the Dow go up 118
Let me explain.
points?
If you price it in silver, the Dow is actually off 350 points today. What happens is when the Dow loses value, you're lowering the unit where you're measuring prices. So prices have to rise to compensate from the diminished value of the currency. So it's not that stocks are gaining value.
Peter, you know what it seems like to me? That seems like a four-corner bank shot. I mean, the fact is that the traders are not trading on the basis of how much they're losing because of the devalued dollars. They're trading on the basis of company news, much of which is positive, and that's moving the market up. Hold on a second, Charles.
First of all, corporate news as opposed to economic news is starting to resonate, and that's because valuations, PE ratios at a two-decade low. People are willing to go in there and buy stocks like retailers, even in the face of a possible recession, and bid those stocks up because these stocks have already paid a heavy price, perhaps too heavy of a price. People like the risk reward. If they're wrong, they won't lose that much, but if they're right, they'll make a lot of money.
I think the corporate news we see today is an illusion. Much of the euphoria we have today is because there seems to be a solution for the subprime problem for the mortgage insurers and the like.
The
bond insurers. And these are just temporary fixes, even if they get a cash infusion from the banks. The banks bailing out their own insurance companies is not going to fix anything. It's going to provide a safety net as long as housing prices don't deteriorate further. So we kind of cling to any sign of hope we have. The market wants to go high on that, but we still have huge issues.
A triple-digit rise is more than a cling. Tracy Burns is down on the floor of the New York Stock Exchange. Tracy, first of all, was it IBM that was really moving this market, or was it a broad movement?
No, it was definitely IBM. And David, you're right. They're not talking about a weak dollar down here. We're talking about corporate news. Anything that comes in is what people are trading on. We're up 115 points. There was a ton of stuff today. We started the day with negative news, but IBM, as we've been saying, the market is looking for any glimmer of hope to go higher. IBM said it was going to do a share buyback, $15 billion, one of the biggest, and the market reacted. We got Vice Chair Cohn saying we should focus on growth. That helped. And we also got home builders actually doing well. You know, we had this news about MBIA, keeping their AAA rating. It helped the financials for a while.
Okay.
And we had that. And I'd just like to point out, too, that Goldman has been down all day long, Goldman Sachs. Merrill downgraded it, and yesterday we got word that they might have a bad, not-so-great quarter. So Goldman's been struggling all day, even though the financials and the home builders have been up. Liz and David, back to you guys.
Gary Kalpom, you know, sometimes the traders on the floor, with all due respect, are like 6-year-olds following a soccer ball on the field. They just go right at that. Nobody's playing defense or looking kind of way down the field there. But is it all IBM today, or what do you think is at work?
Oh, I think Scott Blyer, who's been 100% right on this market, said it best. This is a broad move, and I'm looking at housing stocks, retail acting better, even the down-and-out semiconductors. So if we can get some of these bear market areas putting in lows and doing better, this market may have legs. But just be careful. This market is trying to fool everybody with the reversals every day. You know, as far as this dollar talk, for me, the market is denominated in matzah, not dollars. So I don't know what comes of that. we're in decent shape here.
All right. Well, certainly that applause is heartfelt at the moment because they look at a triple-digit gain on Wall Street, and frankly, for the moment, they don't care much about the dollar. They care about those gains of individual stocks. The Dow Jones Industrial Average is up triple digits. So is NASDAQ is up percentage-wise by about the same point as you hear the closing bell, and the trading day comes to a close, but the business day continues. And here's the financial.